So how did Ireland end up becoming such an attractive destination for all these tech companies in the world, including Google, Apple, Intel, Sony, bunch of others? So you'd have heard how all of these companies' major global profits are locked into their Irish entities. How did this end up happening? So think about 30, 40 years ago, Ireland set up what you can call the world's first airport duty-free store. Essentially what they did was they set up like a 600-acre area next to the airport, saying that any manufacturing company that comes here to manufacture and assemble products would not have to pay any local taxes. They would not have to pay any custom duties, so to say, um, which attracted a huge bunch of international companies which were manufacturing small size but high value items. This included computer chips, this included other small electronic equipment, as well as DeBeers for diamonds. So all these companies, including Intel, at that point set up their Irish entities to take this benefit. However, of course, over the years, most major economies in the world have set up free trade zones and special economic zones, as has India. So Ireland kind of lost its USP there. But the second point, coming to the corporate tax rate. So Ireland has a corporate tax rate of 12.5%. In addition to it, they have an R&D credit, which means that if you spend on R&D activity in the country, 25% of that amount will go into reducing your tax rate even further, which is why all these tech companies who spend heavily on research and development find that effective tax rate very, very attractive and profitable for them. In addition to it, now there's a transfer pricing angle. So what is transfer pricing? That is all multinational entities who have different entities set up in different geographies. What they try to do is, so if they've made any profits in a high tax jurisdiction, they try and pay off expenses to entities in low tax jurisdictions. So if you were to pay, say, pay for ads to Google India, an amount of about 100 rupees, they would go on and pay about 80 rupees to the Irish entity for backend support, for certain licenses, for royalty, for intellectual property rights, thereby reducing their tax in India to just about 20 rupees, where India is a high tax jurisdiction. So companies tried to pay for their royalties to the Irish companies. In addition to that, there was this transfer pricing scheme that came about that all these companies started taking the benefit of, called the Double Irish Dutch scheme. FinShots recently did an article on it explaining it. It's a beautiful article. I'm going to share it in the description. Go check it out. But explaining it simplistically, these companies set up one Ireland entity which employed a lot of people, a second shell holding company for the Irish entity which was controlled by another entity in Bermuda, and also paying for certain licenses to another entity in the Netherlands. Through this arrangement, all these tech companies have been able to bring their tax to zero, effectively zero, which is why this has been such an attractive destination for all tech companies of the world. However, because Ireland was facing a lot of pressure from a bunch of other countries such as the US, saying that these countries were unable to collect tax because of all these tech giants taking the benefit of the double Irish Dutch sandwich. Starting 2015, Ireland said that they would not allow any new companies to take this benefit. And existing companies had only till about 2020 to take benefit of this scheme. In addition to it, you've noticed how the President of the United States is heavily lobbying for a global minimum tax rate of 15%, which again is higher than what companies have to pay in Ireland. Not just tech companies, interestingly, even GE Capital Services is one of the biggest, possibly the largest airline leasing company in the world. Even they have their headquarters in Ireland. Interesting? Share it with someone who may like it.